Alright, what up guys? And in today's video, we're going to be discussing whether manual trading or trading bots is the biggest winner. Now, before we jump in, make sure you hit that subscribe button to keep up with all the content. Now, as a trading enthusiast myself, I've often had this question. So let's just dive straight into it. Now, first, we've got manual trading. The biggest advantage of manual trading is flexibility. Manual trading offers tremendous flexibility in terms of adjusting strategy in real time based on breaking news or sudden market shifts that algorithmic trading bots just simply don't have. You can trade any assets that you want at any time that you want, assuming of course if the market is open. You can easily respond to any news that may happen during that time frame to adjust your trading strategy. And you can easily decide when to get out at your target profit, or maybe the momentum will carry in your favor. Moreover, there are also many other factors to trading that rely on this human aspect. One, for example, is fear or greed. This index is a great way to gauge whether the prices of an asset are fairly priced. Or put more simply, this index is designed to measure the human emotions and how much they're willing to pay for a certain asset. Other human variables, such as supply and demand, are incredibly difficult for trading algorithms to predict. However, the flexibility that comes with manual trading is that you can adjust your strategy easily to any of these indicators. Moreover, when you're manual trading, you can take in a multitude of other factors that don't just rely on some trading indicators or backtesting. You can easily use qualitative factors to judge the current market scenarios and make smart trading decisions based on that. The second biggest advantage of manual trading is experience and intuition. Manual trading allows for the human touch, incorporating the gut feeling and intuition into trading decisions. Now, obviously, these intuitions and gut feelings may not always be right, but if you are an experienced trader or know someone who is knowledgeable, these intuitions might just outperform a typical trading bot. If you get past the learning curve with enough trading experience and knowledge, and knowing when the best time is to buy and sell an asset, will most likely always outperform computational logic. With a manual strategy, traders always have control over their trading decisions. And even if you're not profitable right now, if you put in the time and effort to learn where you're lacking, the chances that you will be profitable in the future increase tremendously. However, there's an opposite side of this human touch. With knowledge and intuition also comes impatience and emotional bias, which are the two biggest issues behind manual trading. Many traders might view the market as moving too slowly or too erratically and pull out immediately, even though they had a winning trade. In fact, this is the main reason why many traders are losing. Even if you have the best trading strategy in the world, you're still bound to make mistakes every here and there. And if you make enough of those mistakes, then you're almost guaranteed to wipe out your entire profit. Emotional bias and impatience leads to impulsive decisions and substantial losses. And if we take a look at the statistics, only 1.6% of all traders are profitable. In fact, the average individual investor underperforms the market by 1.5% every single year, and active traders underperform the market by 6.5%. Taking this into consideration, we can see that humans are terrible traders. Only the small minority of any traders can actually become profitable. So statistically, you're most likely to underperform the market at any given year. Moreover, the learning curve to manual trading is incredibly time consuming. It requires a significant amount of commitment to learning how the stock markets operate and to learn which trading indicators that you want to use and which actually can predict the market. You not only have to learn about the different assets and how they move, you also have to learn about the different trading indicators that can predict the future prices of those assets, as well as learning how to use market orders and limit orders, as well as buying or selling calls and puts, which we won't even get into in this video. Moreover, popular strategies also incorporate a ton of different indicators outside of just the ones given to you. Sure, you can use the MACD or the RSI, but you also have to learn about support and resistance, and trend reversals as well as momentum. There's just so much information packed within manual trading, making it very difficult to start out profitably. Moreover, you not just have to learn about how you can trade these assets, but rather you also have to keep in mind that there may be fees related to each type of trade. For instance, typically in the crypto and forex market, there's going to be transaction fees they have to pay attention to. If you're into options trading, you also have to learn about those fees as well. Transaction fees, commission fees, and spread fees can all easily eat into your profit. So you have to be incredibly careful with all this when you're trading. However, overall, if you're able to overcome that steep learning curve and use your knowledge and intuition to become a profitable trader, you can still make a profit using manual trading. Manual trading typically suits those who value adaptability and have the ability to easily respond to any market changes. However, you have to have the discipline and commitment required to become good at manual trading. However, I would recommend that every beginner trader starts off by manual trading because you have to understand the different types of indicators and how the market will move. You need to know the basics of all this information in order to properly use trading bots as well. Now, speaking of trading bots, let's talk about their pros and cons. Now, the biggest advantage of trading bots is their consistency. Trading bots don't get tired and they're able to trade as long as the market is open. Now, for the stock market, that only might be 8 hours a day. But if we're talking about the cryptocurrency or forex market, these markets are open 24/7, which means that these trading bots can also be active 24/7, making profitable trades for you. All these trading bots will be automated, therefore you don't have to touch them whatsoever, making them incredibly consistent in what they do. Moreover, the speed of these trading bots are also incredible as well. They can place hundreds of orders just within fractions of a second, which makes them incredibly good in high frequency trading or arbitrage trading. Because these automated trading bots are always set on predefined rules and strategies, you know that the trading bot will always execute those trades correctly. Now, that doesn't mean that they're guaranteed to be winners every single time. However, you know that the price that it places the order at and the lot size will always be consistent with the trading program that you give it. Therefore, that in and of itself removes some of the human errors. Moreover, they completely eliminate the human nature and emotional bias as well. Therefore, they are the most consistent trading strategy that you could have. Moreover, trading bots are incredibly easy to backtest as well. You can simply run the numbers of, for example, Bitcoin into this trading bot, and you can analyze how well it performs just based on historical data. You're basically simulating how this trading bot will perform in the current market without risking any other capital whatsoever. And it makes refining and optimizing your trading strategies super easy. Now, another advantage of trading bots is that diversification is key. You can trade multiple different assets at the same time, which goes hand in hand with how fast they are. Being able to trade hundreds of different orders at the same time allows your trading bots to not only trade one asset, but to trade a multitude of different assets. However, there are also disadvantages to trading bots as well. Now, the first major con of trading bots is their lack of adaptability. Now, like I mentioned earlier, as a manual trader, you can look at breaking news as well as market changes and quickly adapt your trading program to adjust for these. However, with trading bots, they can't do that, which reduces their overall effectiveness. You can think of it this way: trading bots do what they do incredibly well, but the moment the market changes outside of what they know, trading bots fail incredibly miserably. Moreover, trading bots also can't factor in human emotions. Indicators such as supply and demand and fear or greed are based on human emotion. However, trading bots can't accurately recognize this and trade based on that. And because trading bots are mostly back-tested on historical data, they may have an overdependence on that historical data and not recognize any new trends or emerging trends. This could potentially cause them to miss incredible opportunities that you could have noticed as a manual trader. Moreover, it is very difficult to make a trading bot that has the ability to analyze a ton of different indicators and be able to trade profitably with them. As a manual trader, you can easily analyze and look at the different trading indicators on your screen and make adjustments based on market changes. However, for a trading bot, it is very difficult to fine-tune those small details to be able to optimize your profits. Overall, trading bots are incredibly ideal for people who are seeking for consistency and a more passive way of trading. However, if you do use trading bots, you have to remember they're incredibly limited to what they do. They can be super consistent and give you an incredible profit margin on what they do well, but the moment the market changes, it is incredibly hard for them to adapt. Now, one more disadvantage of trading bots is their fees. Now, once again, there's always going to be transaction fees if you're in the forex or crypto market. And if you're only using the stock market, that means you can only take advantage of this consistency and speed 8 hours a day, which might not be beneficial for everyone. However, if you do use pre-existing trading bots that are offered by companies, you also have to pay monthly fees or even transaction fees on every trade that these trading bots place. These fees can rack up incredibly fast and even take out all the profit that you could have had from that one trading bot. So you have to keep that in mind whenever you're using these bots. Now, overall, manual trading and trading bots have their own respective disadvantages and advantages. However, in my opinion, I do believe that manual trading can be a lot more profitable than just trading bots. Your ability to adapt to any new market changes gives you the freedom to trade however and whenever you want to. You can almost think of manual trading as a very high skill gap trading. The more you learn and the more effort and time that you put into manual trading, the better and better you'll get at it. If you learn from your mistakes and properly implement a good trading strategy and have the discipline to do that over and over again, then you're most likely going to be more profitable than any trading bot ever could be. However, if you're looking just for something easier and simpler and don't have to put that much time into it, then I believe trading bots are the best strategy for a passive approach to trading. You can basically just set and forget them and they'll trade for you 24/7. However, you do have to keep in mind that if the market does change drastically, for instance, if it crashes or explodes, then you have to remember that these trading bots can't quickly adapt to that situation and you have to go in and change them once again. However, I believe for any trader, it is a good idea to use a combination of both. You can use automated trading bots to give you signals on whether you should buy or sell, or you can use them as confirmation for your own trading strategies. Moreover, if you want to test your own trading strategy, it is a great idea to backtest that strategy using trading bots. Moreover, even if you do believe that manual trading is king, you can still use trading bots on the side as another way to bolster that income. Remember, the key for both is to maximize your profits and minimize your losses. And whichever one performs the best at that should be the trading strategy for you. Thanks for watching, and make sure you hit that subscribe button. Until next time, happy trading.